Welcome to the Investor Empowerment Series radio show, empowering your real estate investing with techniques, opportunities, and information, minus the BS and sales pitches. Now, please welcome the host of the Investor Empowerment Series, Joe Mueller, from the Tough as Nails Investment Syndicate, Joe Mueller.
All right, welcome back to another episode of the Investor Empowerment Series radio show. This is episode number 7, featuring me, Joe Mueller, the analysis of a deal. So today I wanted to talk about what types of opportunities are out there in the buy and hold market for investors to purchase on their own, either on market or off market, meaning either with a real estate broker or through an off-market source like a wholesaler or an auction, maybe something online, for example. So today we're going to talk about a property in Elgin that I recently acquired in the fall of last year, 2015. I was contacted by a wholesaler, actually, who is based out of the city of Chicago, and he had an opportunity in the Elgin area. He sent me some basic information, including an address, and said, "Are you interested in this property? I haven't put it out there yet to the rest of the investment world." And I said, "Yep, that's in the area that I'm looking for properties." And he said, "Well, why don't you go take a look at it? Just go knock on the door. It's tenant occupied. Let's see if you can get in there."
Please take a moment to hear from our featured sponsors.
Today's episode is sponsored by Jordan Capital Finance, offering lucrative rates on fix and flip line of credit loans, as well as opportunities for buy and hold investors. Please visit tanisgroupllc.com/funding for more information. Pathway Financial offers 0% interest on unsecured lines of credit loans for all types of real estate investing. Please visit tanisgroupllc.com/funding for more information.
So I did the drive-by, went up to the door. Nobody answered. The house looked nice from the exterior. I shot the wholesaler an email from the site and said, "Hey, I'm here now. Do you have contact with this tenant so I can get in and take a look?" He said, "No, sounds like they're not going to be available for any type of visitors to see the interior until Saturday at 1 p.m. Well, it's now Thursday at this point. And he said, "And I'm actually co-wholesaling this deal with another wholesaler, and he has already put it out to his buyers list. So you might have some competition on this one at this point." And I said, crap, because I like the house. The price he was looking for was $52,000 for this property. I could tell even in its as-is condition if the interior was in pretty bad shape, which I didn't know at the time. Based on what I saw in the exterior, the size of the house, and the market, the street and the market that this property was in, that it was probably easily a $100,000 house, as is, the way it sat. So I thought, okay, well, this is a good opportunity. So I said, okay, I will be there at 1 o'clock on Saturday to get inside the property, and hopefully we can negotiate something out from there. He says, great, see you then. So Saturday rolls around, a couple days later. I take off and get over to the property right around, I was probably there around 1:15 by the time I got there. And there was a bunch of people in the house already. The tenant was sitting outside on the front porch talking to the other wholesaler that was a part of this deal. My main contact was not present, and I was actually the last investor to show up. The wholesaler at the time who was present said, "Yeah, go ahead and take a quick run through. There is somebody upstairs in one of the bedrooms, so don't open the door that's locked." I said, "Okay, no problem," obviously. And I walked through the property. Bunch of stuff in there, kind of a little bit of a hoarder house, but sometimes those are the best opportunities. So I thought, all right, I like what I see so far. Kitchen was in bad shape, bathroom was in bad shape, but besides some cosmetic drywall work it needed, I noticed that it had a new roof, or a newer roof. It had newer gutters and downspouts. Siding was kind of old, but in decent shape. Also had a 2-car garage in back with a new roof. So it had a lot of qualities I found interesting in it. Again, knowing that it was probably worth about $100,000 as the way it sat as is. I also knew it would probably rent for $1,300 to $1,400 based on the fact it's a 3-bedroom, 1-bath in a 1,600 square foot house in this area. So I was definitely intrigued. And as I left, I shook the hand of the wholesaler who was present. Again, not my main contact, but the guy that he had show up. And I said, this looks like a decent property. I'll be in touch. And he said, oh, you know what? I just got a contract on it. Somebody showed up and actually handed me a $1,000 earnest money check. I'm sorry, but looks like we're going to go with this other guy. And I said, okay. Did he offer full price? The wholesaler thought about it for a second. He's like, well, yeah, it's pretty much full price. And I thought, okay, pretty much. All right. Let me see what I can do on my end. And the wholesaler says, okay. So I get back home and I contacted my contact, which again, this is a co-wholesale opportunity, which basically means these two guys are working together to sell this property. I believe it was because my contact has a really large buyer's list, and the wholesaler that was on site at the time, I don't know if he was newer. As a matter of fact, I know he wasn't newer because I ran into him before at some networking meetings and things like that. But for whatever reason, he was partnering up with my contact, so these two wholesalers were working together, and they were splitting the fee to some capacity. Or the way it ended up actually working is my wholesaler agreed to a price with the first wholesaler, and then whatever in addition that I was willing to pay, my wholesaler was going to receive. So just to walk through that real quick, wholesaler A had the property actually under contract for $20,000 from this seller, which is an amazing price for this area. You cannot touch anything in this neighborhood for that type of price of $20,000. That's a once in a year, once in a lifetime, skyrocketly, low price, unbelievable deal. He had charged a $30,000 wholesale fee because they were asking $50,000 for the property. And I went back to my wholesaler and I was like, that's a big fee there. $30,000 in wholesale fees, that's even more than the cost of the property. He's paying $20 and you guys are charging $50. And my main contact said, well, that's what he's going to get. He's wholesaler A, I'm wholesaler B. I'm like, so if you're interested in paying a little bit more, that's what I would get paid, and maybe we could make this work. Well, it turns out that nobody had actually executed a contract yet. So this property was not officially under contract through a new buyer. And when I say that, I mean the wholesaler A did have the contract with the seller at the time for $20,000 that was fully executed. But even though when I met him on the site, and he told me that he just accepted an offer essentially and took earnest money, they hadn't actually physically executed a written document at that point. My wholesaler, wholesaler B, noted that to me and said, well, again, if you're willing to pay me a little bit extra, I could probably make this work. He goes, I'm thinking maybe $2,000 earnest money and something around the $57,000 mark. So this wholesaler that I'm dealing with would make $7,000 on top of the $30,000 that the first wholesaler is going to make. So big spreads here, big spreads. Again, knowing the value being at roughly 100, I pulled some quick comps off my laptop, realized that this was probably a $120,000 house after repaired. Again, very easy numbers, not having to look too hard. The comps were already there. So I said, sure, I'll give you $55,000 for it, and I'll put down $2,000 earnest money. And the wholesaler says, okay, great. Let me call wholesaler A, and we'll lock this up. An hour later, I was docu-signing a contract for $55,000 with $2,000 down, all cash. And I had an executed contract in my hands with an assignment agreement between two different wholesalers. So it was kind of an interesting transaction on that effect because they both got paid separately out of the deal. So to start this process, property in Elgin, my acquisition price was $55,000. I had a tenant in it paying roughly $800 a month, which was way low per market, but she'd been there for like 10 years. So, lo and behold, about a month later, the closing date comes, I get a call from my attorney who says, hey, I'm here at the closing, we got a problem. And I say, well, what's the problem? And he says, well, this lady who's occupying the property is not planning on leaving right now. She might need another couple months. Are you willing to do like a tenant holdover situation where you keep the tenant? Because initially in the contract it said that the tenant was vacating by closing. And I said, well, yeah, what's she going to pay? And he goes, well, apparently she's been paying $800 a month, but it hasn't been consistent. So, I'm not really sure if it's going to work out. He goes, how about we do like $1,000 fee to escrow? And if she's not out within a month, you get to keep the $1,000 for yourself for, kind of the costs and aggravation of having this holdover tenant in it, but you might have to evict her at that point. And I said, again, based on my numbers, it looked like a good deal. Knowing that there was some value there, that I'm basically buying the house for 50% of what it's worth. knowing that it needed work, but nothing that I would call too dramatic and nothing structural, nothing very serious, just needed, updates to the kitchens and baths and then basic cosmetics. I said, yeah, let's do that. So we closed the deal. The next morning, I drove over to the property. I introduced myself to the tenant, and I said, hey, my name's Joe. I'm your new landlord. Talked to her for about a half hour. She was telling me how she wanted to stay, and she was hoping that she could only pay $800 a month in rent, but she would take care of the utilities and cut the grass and shovel the snow. And, I said, well, ideally I need to get in here and fix a bunch of things, and with you in here, it's really not going to work. And she said, okay, well, maybe I can try to find another place to go. And I said, sure. So I said, I'll come back in about a week. I was like, I'll give you a call. Got her number, and maybe we can talk further. So week goes by. I drive back over to the property. She's still in there. She's telling me she's going to vacate within 30 days, which would also meet the contractual obligation that we set up with the escrow account. So she had essentially, 23 days or so to move her stuff out. She said she found another place. I said, okay, perfect. No problem. I'll wait a month. Again, being patient, knowing that I'm getting a great opportunity on this property, and hopefully she doesn't destroy it in the process. Because I didn't have a valid lease at the time. She was just month to month verbally. I didn't have any evidence she'd even paid ever. So it was potentially a squatter situation, but knowing that I could go to eviction, I was willing to take that chance. So lo and behold, day 30 arrives. I show up at the property expecting to see, a moving truck and stuff cleaned out. And of course, she's still living there like nothing ever changed. She did tell me she started moving some stuff out, but it would be really helpful if she could just take her basic necessities, because she was downgrading to a one-bedroom apartment and didn't have room for all her furniture and all her years of stuff, which she also claimed was partially the original owners who left a bunch of stuff in the property, which, by the way, I've heard that one before. It was probably all her stuff, but, whatever. Again, at that point, I'm thinking, okay, well, now I'll be able to cash in that $1,000 escrow check that's been sitting there waiting for me at the title company because she's holding over past 30 days. And then, it's probably going to cost me, we'll call it $500 to trash out the rest of her things, and I'm willing to take that chance. So I said, okay, fine. Well, when are you going to be gone by? I need to expect to have keys in my hands at some point in the near future. She said, well, if I just need to take my initial belongings, my basic stuff, and can leave the furniture, then I can be out of here within 2 days. And I said, okay. Today was a Saturday. I said, I'll be back Tuesday morning. I said, give me a call. We'll meet up at whatever time. So Tuesday rolls around. I give her a call. She actually didn't answer, and then called me back and said, yeah, I already left. I'm out of the house, and the key's under the doormat. I said, perfect. So I drove back over to the property again, found the key under the doormat. Obviously, she had left quite a large amount of personal belongings behind. I recontacted her, and I said, I know you already kind of left the key and you don't plan on coming back, but is there anything in here that you need to come back and take before we start getting a dumpster and, it all gets thrown away? And she said, no, all that stuff is the original owners. It's been sitting in the house for years. All that furniture was left here when I moved in. I don't want it. I'm like, okay, done. So had my guy through there within a week. He cleaned it out, emptied out all the garbage, got a big dumpster. It was basically filled up a 30-yard dumpster full of stuff. Quite a bit. Cost me about $700 to get everything out of there. So I was still up a little bit, though I didn't have any income coming in. I still had $300 extra out of that $1,000 escrow payment I got. I started getting bids on the property. I had 2 bids. One was at $27,000 for a full interior rehab, which included a kitchen and a bathroom, interior paint throughout, refinishing the hardwoods, new ceramic, new cabinets, granite countertops, and new appliances. So in my opinion, just a heavy cosmetic rehab. The house was over 100 years old, so I anticipated there'd be some plumbing problems. We built in an extra $1,000 to cover any type of plumbing issues, which, as a matter of fact, did get used because the main water line had an issue, so I had to have that repiped, and that cost me about $900. So I was basically looking at a bid for $25,000 as my best price for a contractor I have used before who's actually based in the area. Very dependable, and he gave me a 4 to 5 week turnaround time. I checked on the property throughout the process about once a week, and there was progress occurring. Engaged the contractor consistently. I checked up on him. We structured a 3-part payment plan, so he got a deposit up front of about $8,000, an additional payment of $8,000 halfway through the project, which was about 3 weeks, maybe 4 weeks in. And then at the end of the project, when he actually finished the job, which was about, I believe it was 6 or 7 weeks at that point. He was a little bit delayed because there was a special order cabinet that he couldn't get his hands on. It came damaged when it initially showed up, and he had to reorder it again. But went through my punch list with this guy and handed him over the check when everything was finished. So at this point, I'm at a $55,000 acquisition. I've got $25,000 in rehab costs. I didn't have a loan on it at the time, but just for the sake of analyzing this deal, we're going to use numbers that, if I would have used a hard money lender on this deal, it would have been roughly $80,000 acquisition and rehab costs. So I'm just going to use blanket numbers of 12% hard money at $80,000 for a 6-month holding time, which again, this is just for the sake of you guys understanding how some of these deals can work. You're using hard money, for example. That cost is $800 per month. If it would have taken me 6 months to rehab this property, which in reality was more like 2 to 2.5, it would have been roughly $5,000 in hard money expense for that loan, which would have covered the acquisition and the rehab cost of $80,000. Once the property was finished, I walked through it. I walked through a couple other comps in the area. I figured it was probably worth about $135,000. In reality, if I wanted to put it out in the retail market, I probably would have listed it for $149,000. So at that point, I'm in it for $80,000, and I've got it listed potentially for $150,000 or $149,900. So there's a nice healthy spread there. I'm sorry, it was $85,000 with hard money, plus the costs of selling that property if I were to go that route. Now, I just want to make it clear that I didn't go that route. I did hold it into my rental portfolio, but I had, a healthy amount of equity in the property, $60,000 to $70,000 approximately, doing quick math. We estimate in this area that it costs roughly 10% when you're selling a property, and that includes realtor fees, closing costs, attorney fees, title insurance, all the little nuances that go into selling a property. So if I would have sold it for, roughly, we'll call it $140,000, that would be approximately $14,000 in costs. That would put me about $135 or so, $136. And again, I'm in it for $80,000 at that point. So we're looking at approximately a $40,000 or $50,000 profit spread right there. So it was a nice flip if I wanted to. Now, I did keep this in the rental portfolio, and I just want to make it clear. I just walked through the numbers to give you guys an example of how these deals can work. And what I did with this was full refinance at $80,000 at 5%, which the monthly payment comes out to $467 per month, and that's on a 5-year balloon commercial loan amortized over 25 years. So 5-year balloon that's due in 5, but it's amortized over 25 years. It's a common commercial loan, at least for this area, those types of terms. And the payment was $467 a month. The taxes are $3,700 a year, which they were already non-owner occupied, so I knew those weren't going to go up. So the tax fee alone per month is $308 plus the $467, which would be my loan payment, which also puts me completely out of the deal, meaning I've got no money in this property at that point. Insurance is about $60 per month for this property. So the total cost to me to keep it and own it in the portfolio is $835 per month. I currently have it rented at $1,500 per month, which puts $665 in my pocket per month. So this was a great opportunity to either flip the property or keep it for long-term net cash flow. I don't have any money out of pocket in this asset because I was able to refinance it, and I actually ended up renting it for a little bit more than I anticipated because we refinished the hardwood. We put in new stainless steel appliances, granite countertops, new cabinets, did some decent quality work to this rental. The bathroom was essentially gutted and retiled, and the tub stayed, but the tiling was done around the surround and things like that. And it was easy to find a tenant that wanted to rent a property. I was able to maximize my rental amount because everything was brand new and everything had been clean and perfect, and the hardwood floors still had, the paper construction walkways on it from when the guys were walking through the property after the hardwood was done. So just wanted to give you guys the analysis of a deal on this particular property in Elgin, Illinois. Those are the types of numbers I'm looking for. So this is not going to say that I wouldn't look at other opportunities. It really comes down to what those monthly costs are and what that rental amount's going to be and how much work needs to go into the property in order to get it rented or in order to get it in like a flip type retail condition. But in this particular opportunity, I think it was a really good example of finding a good deal. And, that came from the ability to network, to talk to people, to maintain contacts and relationships with other investors, because I wouldn't even known about it if I didn't have this relationship with this wholesaler who I'd never actually bought anything from in the past, but it all worked out. And I didn't give up right away when I was told that there was already a contract on the property. When I met the initial wholesaler, I was told that it actually wasn't executed yet, so technically there was no contract on the property. So I pushed the envelope. I offered a little bit more. Everybody walked out of this deal very happy, including the owner himself. So that's it. Thanks for listening to episode 7 of the Investor Empowerment Series radio show. Special thanks to all the police, firefighters, and veterans out there who make this world a safer place every day. Listen up for my next episode next week. We're releasing these on a weekly basis. Stay tuned, and please visit us on iTunes and Stitcher. Give me some good ratings. I really appreciate it. I'm doing my best here to try to bring some quality material to the table. I hope you appreciate it, and I'll see you around soon. Thank you.
Thanks for listening to another episode of the Investor Empowerment Series radio show. Be sure to tune in next week for another empowering episode. We welcome your feedback, so please rate us on iTunes and Stitcher, and visit us at www.investorempowermentchicago.com or tennisgrouprealty.com.